Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about the Producer Price Index historical increase of 11.2%, JP Morgan's earnings release this morning, and Delta Airlines earnings release this morning. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. This morning's producer price index increase was over 11%, the highest increase ever. What does this mean for the markets?
Well, good morning, Allison, and thank you for this question. Obviously, yesterday we talked about the concept of peak inflation when we talked about the consumer price index yesterday and its increase of 8.5%, which was the largest in since 1981. So you think of consumer price index is what you and I pay for goods and services on the open market, right? So that went up 8.5%. When you look at the challenges that are out there, this is the producer price index. You can see the article here. If you can see the small print there in the first line, which is the prices paid by wholesalers. This kind of is your cost of goods sold, your inventory, that sort of thing, supply chain, if you will, issues. So when you look at it from that perspective, the cost to people producing goods and services has increased 11.2%, but yet they're only passing on 8.5% of that onto the consumer. So therefore, that's good as the consumer because you're not eating the full 11.2%, but that's also bad for investors because that means that, 3% and change or slightly less there that is in play is really kind of being eaten by the employer. You also, by the companies that are out there, you also have wage inflation as folks are being not forced, but, having to make business decisions on whether or not to pay their people more. Part of that's due to inflation. Part of that's because other people are paying people more. So therefore, the moving on up mentality of the workforce of if somebody else will pay you more to do the same thing, of course you have to do what's right for you and your family and you would move up. So there's lots of challenges out there. I would say this really overall fits the peak inflation narrative to where if you are a peak inflation person saying yesterday, okay, the market was up, at least pre-market, it did not hold throughout the day as people didn't really buy into the peak inflation thing. But if you think this is as bad as it's going to get, I should say, then yeah, it would be obvious that the PPI would be just as bad or worse than the CPI, and that they're both peaking right now here mid-April, right? And then we start our road to recovery. Again, we had Ed Yardini yesterday made the forecast that we're down to 3 to 4% by end of the year. I would say that seems like a miracle right now. But that also, when these things do tend to peak, they tend to go away just as fast. So we shall see. The story's still out. Obviously, when you talk about the three factors for the market for 2022, you've got inflation, which is the disease. You've got the Fed's reaction to it of raising interest rates, which is the cure. Then you have the Russia-Ukraine situation that we talk about. And, maybe COVID re-entering the situation, which we talked about a little bit yesterday with Philadelphia going back to a mask mandate. Too early to say that that's going to be a factor for sure. So you've got the three big ones out there. And if this is as bad as it gets, it's the worst in history. So you would think this is as bad as it would get. Then, then we can start the healing process. And if we do start the healing process, that's what takes the markets higher. So in sum, Allison, I would say that this really does fit the narrative of peak inflation, and it's not any worse than we were yesterday. So I think at this point, if this is as bad as it's going to get, at least that's now behind us and we can start to move forward.
Next, JP Morgan started this quarter's earnings season with an earnings miss this morning. Is ticker JPM a buy, sell, or hold?
Well, I love JP Morgan. And when you use the horse and jockey analogy, you've heard me say this several times, and this is one of the examples I use. Obviously, I have JP Morgan Chase, which is both an investment bank and a retail bank with their Chase credit card side. You probably have a Chase offer in your mailbox right now, or we'll get one later today because that's how aggressive they are, right? So they're out there, they're aggressively growing their business wherever they can. And of course, the investment banking side has taken a little bit of a hit from 2022, not only just being a kind of a bummer of a market year, if you will, but IPOs and other kind of normal, if you will, market activity has kind of been put on pause because who wants to take their company public in the middle of this environment, right? So I think a lot of folks will be waiting on the investment banking side for sunnier skies, if you will, a little bit later to hop in and now, make their company public. So a lot of those things that give them a lot of revenue just aren't there. So when you think back a week or so ago to JP Diamond, obviously is the jockey of the horse and jockey scenario, longest tenured financial CEO in the US. He was in the chair for the 2007, 2009 global financial crisis. So I think they have the best leadership that's really possible out there to help lead them through this. So I really love everything about the company, except for this headline, right? This morning, they missed earnings, $2.63 a share. And again, they think even CNBC owns up that they're not quite clear what the benchmark is there, but they think it's against a 269 estimate. They did beat revenue, so they're making more money, but they're not clearing more money in earnings. So when you think of the trifecta of earnings, it's revenue, how much money you're making, earnings, how much money you're keeping after expenses, and then the third one is your guidance. Well, revenue was a thumbs up, earnings thumbs down, and then the guidance was fairly muted, fitting Jamie Dimon's narrative of things are not going to get better anytime soon because of geopolitical unrest and economic challenges. So you can see the $524 million hit. When we put sanctions on other countries, that's not free to us either, right? So often that becomes a political tool that is used when I would say harder measures are wanting to be avoided, i.e., troops on the ground. It seems easy for politicians to go out and sanction folks, but again, the inner complexity, if you will, of the financial world and the markets, you start taking down a major player, and that's going to bleed over into things. And obviously, $500 million hit is what JP Morgan is talking about. So it's kind of prelude, to the rest of the week. We have not the rest, but the major players tomorrow have earnings. That's what we'll be talking about for Goldman Sachs, Morgan Stanley, and the rest out there. But I think this sets the tone that things are not going to be good for the banks. As far as whether it's a buy, sell, or hold, I still think it is a clear buy. I think maybe it doesn't turn around this quarter. So could you wait? Sure. When you look at the chart, this stock has been crushed. This is just too good of a stock to be where it is. It's down 3% this morning on the news. Down a little bit yesterday. I'll hit a 3-month chart. Well, let's go 6-month chart. 1 year, I guess, is probably better. So you can see kind of the rise and, all the way down to 127 from 170. You get down here, we're talking a PE of 8 and a 3% dividend. I don't know. I like it. Good leadership, good company. Yep, they're taking a hit. I think it's a strong buy here. So I have no problem putting money to work in JPM. Now, just don't expect it to, turn around and go screaming back higher anytime soon. But I think the catalyst will be there as things calm down in the economy later this year.
Last, Delta Airlines beat earnings this morning and the stock is up 6%. Is ticker DAL a buy, sell, or hold?
Yeah, gasp, right? Like really an airline in this environment is crushing it. Okay. No, I'm not going to invest in airlines. I never have, and I'm not going to start today. So I'll give you, my commentary is sell, but that's almost independent of the news of the morning. So congrats to Delta. I don't want to be, ugly towards airlines. Obviously, a big user of airlines, if you will, because I do like to travel, and our family gets around quite a bit using several airlines out there. So thank you for your service. But it's not where I want to put my capital to work. Again, capital intensive with the airplanes. You have all the leases with the airports. You have a fairly, highly paid and, specific technical skills of the, people involved in the workforce, not only the pilots, the flight attendants, but maintenance. Those are all very kind of specific and airplane specific kind of jobs. So you can't just really go out and replace those people like you can a line worker anywhere else, if you will. So anyhow, there's lots of things not to like as far as investing in airlines. But Delta says, despite surging fuel costs, they hedge those out in the future. One thing, that are numbers in this article here that may resonate with you is, once I find it, it's down in here, 20%. It's been a 20% increase in fares Since when? I shall find it while I'm looking at it here. So there it is. Domestic U.S. airfare rose 20% last month compared to 2019. So again, we're looking a little bit further back. So, if you're traveling a lot, you're going to feel the inflation in airfares as well. And of course you should, right? I mean, everything should inflate kind of together and not specific like gas or lumber did there for a while, sort of thing. But, the overall for the airlines, they run off of just a few days margin. If we have any big shake to the economy, we tend to bail out the airlines because we need to, because they're a service that we need to, keep the economy going. So of course we're going to bail them out, but not a place where I would necessarily invest money. Congrats for the investors that are up, 4.4% this morning pre-market, but we'll pull the chart real quick and look at a 1 year. This was part of the recovery stock, if you will, from COVID. There's a 1 year chart, really has not done much of anything. If you go to 5 year, you can see here's the COVID dip and the high volume at the time. So yeah, did it make sense to invest here and ride it all the way up? Yeah, I see no reason to keep it going forward. So in summary there, Allison, I think JP Morgan's a buy, Delta Airlines is a sell, and that has very little to do with the earnings releases that we had this morning.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.